Happy Monday, everybody. Super excited to bring one of our very experienced title officers. Terri is joining us today with Tycor Title. Hello, Terri.
Hello, Roxanne and everybody.
All
Happy
right.
to be here.
Nice to see you. Thank you so much for being here. And today we are talking about Proposition 19, which is a continuation of Prop 13, which used to be the proposition that ruled over property taxes in California. So let's go in there and explore that with Terri. Terri, if you can tell us a little bit of a background about yourself, when did you get into the business of selling title insurance?
I got into the business many years ago before we had all this electronic gadgets. But let's say I got my real estate title license in 1984. So I've been in it probably about almost 25 plus years, and I enjoy it. Happy to share with you some of the new rules that have changed over the years. As you mentioned, property taxes is a big key feature right now, where we used to be able to transfer our property taxes from one homeowner to the grandchild or to a child and keep the same base rate.
Mm-hmm.
You can still do it, but they have a few new inclusions.
Inclusions or exclusions?
Inclusions, where it has to now be a primary residence for it to qualify for parent transfer to a child. Before, it could be just any type of transfer and they could rent it out or use it for investment property. But now the new rule is the qualified child or the grandchild must reside in the property that is being transferred to them as a primary residence. And if the current value exceeds a parent's taxable value by more than $1 million in price, or if it's a vacation home, there's a $1 million exclusion for each property, and the taxes will be adjusted after the $1 million mark.
So vacation home, that is considered a second home as well then?
Yeah, that's a $1 million exclusion for each property. But the primary residence, there's not going to be any tax reassessment up to $1 million for the child or the grandchild if they live in the primary home as a resident.
So is that when the homeowner passes away, or is that going through the inheritance tax rules?
It's when they they transfer when they pass away. And it can also be used, the Proposition 19, for the current homeowner, for people ages 55 and up. The old rule was under Proposition 60 and 90 was they could transfer the property taxes that they're currently paid to any new home purchase if it was of equal value or less value in the same county to qualify. But the new rule, Proposition 19, gives the homeowners the advantage of transferring not only one time, but up to 3 times anywhere in the state of California, and they can buy either less value, equal value, or more value. Equal value or less value, they carry the same property tax with no increase. If they buy for more value, they only pay the difference from what they sold the home for and what their higher purchase price is and get taxed between those $2 amounts. So it's a big savings for homeowners who want to transfer and maybe downsize to a one story.
Right, exactly. Now, is there a time frame? Let's say, if you buy your replacement property first and then you sell your current home, or vice versa, is there a time frame?
It's within 2 years.
Within 2 years.
Yes. No. And it's for either 3 times. You can do it for either 55 and up in age, or if you're severely disabled, you can try to apply for a qualification for transferring your tax base for severely disabled.
So it's not a one-time deal. You can do this 3 times.
Yes, that's a big change for homeowners who maybe not sure if they want to relocate one time in the same county or if they want to transfer closer to their grandkids or family members in another county, they can use that same tax rate base for 3 times.
But this is a rule only within the state of California.
Right.
Got it. Got it. Okay. And so I think that this was basically a way to make the 55 and older population more mobile.
And
But
it helps because so many people 55 and older owned a lot of property, and they would pass it down to their kids or grandkids, probably along the beach communities, and have those same low tax bases. Now they cap it off at that $1 million mark so that the county can see a little bit of revenue in the taxes as the years go by. But it also helps the current homeowner, like you said, move without having to worry about being reassessed for the current home value if they do decide to locate from 2-story $1 million home to a 1-story $1 million home. They carry the same tax base. I just did a case actually for a gentleman out in El Cajon, Granite Hills area. He did buy he sold his home for close to $1,900,000 and bought just a little bit under the exact same price. And he was able to bring over his property taxes he lived in that other home for 20 plus years. So his new tax rate on a almost $900,000 home was only $6,000. So that's a pretty big savings compared to today's current tax rate if he were to buy brand new at a price of $900,000.
so, but what you're saying is this is only for single family, not single family, but for owner occupied
Right.
Homeowners. So
55 and up.
55 and up. So if you're selling an investment property and then buying another investment property, you would not be able to take advantage of this rule.
No, but you might consider a property tax exchange to pay less income tax, but property taxes will be reassessed.
So property taxes will be reassessed. You could still save on your
capital gains by doing a 1031 for investment property to investment property, because you can't do an exchange on a primary residence.
Exactly. And let's also explain to our audience what a 1031 exchange is.
A 1031 exchange is you could buy real estate, actually, not just in the state of California now, they've expanded it to multiple states. Say you're selling a current property in Carmel Valley and you want to purchase a home in Carlsbad, you can change property by doing an exchange, either selling your investment property first and then finding your new property to exchange to. You can put your money into something called an accommodator. Instead of taking your money at close of escrow, when you close that investment purchase, the accommodator at a 1031 exchange company will hold the money for you until you identify your new investment property, and they will fund your investment property from the accommodation exchange company to help you avoid having the money enter your bank account. And it does qualify for a tax advantage savings on capital gains tax. I have many clients that use that. And if you are not sure of which property to sell, you can also do a reverse exchange. If you see a property you really, really want to buy that will be an investment property, you can purchase it first and then list your home for sale and do it backwards as a reverse exchange. We have clients that do that as well, and the funds are also handled by a 1031 exchange company. There are many to choose from, but we have a couple we could refer if anybody is interested in it, looking up their website or videos, and they're very helpful to help you save capital gains taxes.
And the exchange companies that you are describing, are they affiliated with Ticor Title?
No, they're affiliated with the F&TG brand. One of them is called 1031 Exchange. Steve Decker, I have a phone number or website if anybody's interested. But we also work with multiple ones. As I mentioned, there's quite a few good ones in the San Diego community. They all do a good job. But if anybody's interested in it, they can go to the website of ipx1031.com, and they will be happy to answer any questions you have about a 1031 exchange.
Okay, excellent, excellent. Okay, I am sharing Terri's contact information, which is on the screen, and the website that she's describing, ipx1031.com, is
Yep.
the website that she's describing to get more information on a 1031 exchange account. And let's go back to Prop 19, and let's.
You can also email me or text me at the phone number you have shown. I'm happy to email them a one-page flyer, everything you need to know about Proposition 19. It replaced the old proposition of 60 and 90, where the grandparent to the children or the parent to the child one-time free exclusion rules. It explains the new Proposition 19, the transfer, who it is available for the transfer, and also the old method. So I'm happy to share that with anybody via email or by hard copy in the mail.
Excellent. So I've throughout the years I've come across a lot of families actually like that, and like you say, a lot of grandchildren who get to keep the property based on those tax exclusions.
Right.
So would you say that this is a way for the county to make some more money because the heirs would have to sell the property in order to pay the taxes?
I do. I have to say it's for that for a fact. I had so many clients reaching out to us before the deadline when Prop 60 and 90 were right before it expired, with the grandparents gifting and deeding properties all over California to their grandkids or children up front without that $1 million rule. Because as I said, sometimes one property in Newport Beach can be transferred for generations and never be sold. It could have started at $200,000 and now easily be worth $7 or $8 million, and that's a lot of revenue that the county is missing. So I know it had to do with something for the city to make up money, but it also is trying to help the current homeowner, like you said, move more than one time. They tried to do a little give and take, I think, on both sides.
What if you transfer the property into a trust, and the trust basically, the name of the property, the owner of the property is the trust, and the trustee of the trust could change, but the trust itself never changes? Then would it matter? Would it matter if it's going from from the grandparent to the parent from the parent to the grandchild? Because if the property is under a trust, then in essence you wouldn't have to make a change.
Right, but there's also, upon recordation of death, you do record a death certificate if the parent or the grandparent passes away. There's a successor of trustee, and they get a new deed, and they'll have to issue a new trustee name if they are not going to be on title themselves, or if they're going to split it amongst whatever the trust should play out as to who should be receiving the property. That is a way to extend it a little bit longer, but it's not an endurance for long term because of the death certificate needing to be recorded.
what if you transfer the property? I'm giving you all these different scenarios just to figure out, what would happen. What if you transfer the property into a non-revocable trust? Because in that sense, then the trust is the owner of the property, and
Right.
you know, and
That's a good question for Steve Decker at IPX 1031 Exchange, or even your local CPA. I would not want to say that is a sure way and then not have it be done so. But I am actually going to visit our trust attorney this next week to update our trust. So I highly encourage everybody online or listening in, if your property is not vested into a trust, you, number one, make sure you have the best vesting available. I do have a booklet or another one-page flyer I'm happy to share or email out to anybody online as to the different ways to take title, as that is a very critical factor when you want to leave your property to a specific party, and it must be done correctly, because if it's not done correctly and somebody passes away, you will have to attend probate, and that's a very unfortunate situation. I
and
just had
expensive situation as well.
Yes,
Yes.
I just had another situation where a husband and wife were on as community property, but not as community property with right of survivorship. So they went from joint tenants to community property, and the husband did not leave that address in a will or the trust. So unfortunately, we have to have a court judge review the documents, because they do own another property that is in a joint tenant grant deed trust. But I encourage everybody online. I know when you buy a home, sometimes you're excited about moving in, getting new carpets, paint, landscaping, but it's very important to make the right selection with the advice of your CPA or advisor on how to hold title vesting, so that you as a homeowner get to pick who you'd like to have receive the property when you
I had an unfortunate case like that as well. Actually, it was a partner, boyfriend girlfriend of many years, and unfortunately they weren't married. So once one of them passed away, the heirs for the one side basically forced the other partner to sell, because there was no will in place. There was no and there was no marriage. So she basically had to sell to give the heirs of the partner half of the property, which basically forced her out of San Diego, which was sad.
Yeah, title vesting is another topic, but it is a very important one. I just wanted to bring it up because I highly encourage anybody, whether you're married, single, partners, or buying in a group, to have the best vesting possible. You can always change the vesting once you buy a property, so it's good to refresh and review it after a few years go by and take a look at how you bought your property and what was the grant deed, because like I mentioned, a lot of these couples that bought property, they buy multiple properties and have different vestings on each one, such as this case, and she bought it 2007 and didn't only updated it one time in 2012. That was over 10 years ago. So unfortunately, the husband passed away with no written information as to who was to receive his half.
Yeah,
But
right.
yeah. So title is a one-time fee. It's not something you buy every day at the store or you need, but it's a necessity to have if you're going to be buying a home or selling a home. We would love for you to contact me and my team for title insurance. Any questions, we can service anywhere in the state of California, and we're always happy to help. We do residential, commercial, and refinances, exchanges, any type of real estate transaction.
Excellent. Okay. Well, Terri, thank you very much
Thank
for
you, Roxanne.
joining us
You're
today.
proven pro, and I highly encourage anybody selling her best and best. Thank you. Have a great day.
Thank you.
Thank
You
you,
too.
Adams. Have a nice day.
And audience, thank you
All right,
very much
thank
for
you.
joining us today. And if you like this video, please give us a thumbs up. If you have any questions or any comments, please reach out to me. I'm happy to answer your questions. If you are looking to contact me, there's my phone number. And if you prefer email, there's my email address. And if you are watching this on Instagram, or if you are trying to find me on Instagram, there's my Instagram handle. And looking forward to hearing from you sometime in the future for either reaching out to me or to Terri. And have a beautiful day. Thank you so much
Thank
for
you.
joining us.
All right.
Terri,
Have a nice day. God bless you. All right.
as well.
Take care. Bye-bye.